Most stocks are down year over year. The market is crashing, we are in a bear market, everything is going down. But there are a few stocks with low market correlation doing actually pretty well. And one of these stocks is GEO Group. In recent weeks, you will see that GEO Group actually did much better than the market. The stock gained 10% in a single day last week. So we need to understand what is happening to GEO Group, if it is still a good investment. If the stock is doing so well right now compared to the rest of the market, maybe there is something that the market sees in this stock that other stocks are not providing. I have been investing in GEO Group since October of last year. So far, I'm losing money on the investment, but over the long term, I still believe in this investment. So today we are going to talk about what's happening to GEO Group and if it is still a good investment. Before we talk about this, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am an elite popular investor on eToro. Please make sure to subscribe and to hit the notification bell so that you don't miss the coming videos. GEO Group, let's talk about the business for a few seconds. It is one of the largest private prison companies in the United States and also in the world, because private prison, this is something that we have only in the US. I know it is controversial and it is okay if you don't want to invest in these companies, but I have already told you before that you look at the situation in the US today, maybe you can say you can change the world and in 20 years we won't need the private prisons anymore. I hope that really how the prison system is in the US today is bad, we can improve on it, but today those private prisons are essential. So GEO Group, as a private prison company, they own some of those prisons and they manage some of those prisons. So this is the business. They have one main competitor called Civic, and that's all. Their largest customer right now, most of their customers are actually government. It is not the prisoners. The prisoners are not customers of GEO Group. The customers of GEO Group, of any private prison, would be the government. And right now, you look at the biggest customer of GEO Group, it is ICE, the Immigration and Custom Enforcement. On second place, we have the US Marshals, and third place, the US Federal Bureau of Prisons. And then we have US states, which actually uses the services of GEO Group. This is something very important because one of the headwinds on the company right now is an executive order that was signed by President Biden. On the same day that he became president, he signed that executive order. He banned the DOJ, the Department of Justice, from renewing its contract with the private prisons. So under the Department of Justice, we have the US Marshals and the US Federal Bureau of Prisons. So these two government agencies, they cannot renew their contracts with the private prisons, that is called Civic and GEO Group. But because of the crisis we have on the southern border of the United States, the US Immigration and Custom Enforcement, ICE, is actually renewing their contract. They need more of these private prisons. And also the states. We have inflation right now, possibly a recession. Things are not so good in the US. There's a lot of crime increasing in the United States. So you like it or not, these bad people need to go to jail. Of course, how these jails are today, this is another question. When these people go to jail, you don't want them to come back again. You want them to become better member in society. But this is another question. Now that we understand the business of GEO Group, we understand that big headwind. And as I told you, they are going to navigate this through us mainly. We don't want to put politics into our investments. We don't know what will happen this year. This is an election year. It seems that the Republicans will win the House and the Senate. It seems that Joe Biden will not be re-elected in 2024. And if he's not re-elected, if the Republicans keep the House and the Senate, of course this will be good for the business. But we don't want to use these as catalysts because we don't know how will people vote. What we use as catalyst is what we have on the balance sheet, what we have on the income statement, the real fundamentals of the company. This is what we can use as catalyst. And this debt restructuring that they did in the recent weeks, this is on the balance sheet. So this is real fundamentals which we can use as a catalyst. So what exactly is this debt restructuring? They had over $2 billion worth of debt to be repaid in 2023 and 2024. So next year and then the year after that. So in 2 years, they have to repay $2 billion in debt. That is a lot because you look at the free cash flow that the company is generating, it's about $300 million. So $300 million per year, 2 years, $600 million, plus they have about $600 million on the balance sheet as cash and cash equivalents. So $1.2 billion, they would have got best case scenario in cash, and use that to repay $2 billion US dollars, which is impossible. So without the debt restructuring, most probably the company would have defaulted on its debt in 2024. But now they have done a debt restructuring that some of the debt have been converted into new debts which matures in 2028. So you look at this chart, 2023, 2024, they had 1.7 billion US dollars, but most of it has been converted. Now it is only 480 million US dollars. So 1.7 to 480, that's a big change. So if they can manage the debt to repay the debt in 2023, 2024, and most of the bulk of the debt now is in 2027, 2028. Even the 2026 debt has been converted into 2028 debt, but it has been done privately, so you cannot go and buy the bonds if you want. But for the 2023 and 2024 bonds, you can actually buy them, and they will be exchanged either completely for 2028 bonds or part of it as bonds and part of it as cash. Whether you should buy the bonds for this exchange or not, I'm not going to talk about it. You can do the calculation because I look at the bond prices. As soon as this was announced, the bond prices already went up. So you cannot say you're going to buy today and it will be converted. It is an arbitrage, but now the spread is lower. So it's not worth it for me. But if you have been holding the debt before, then maybe it can be worth it. I tried to look for the price of the bonds before, but I could not find it. So if you know about it, it is up to you. But of course, this is not something that the bond holders are giving them for free. The interest rates are increasing. Before the 2024 debt, for example, the interest rate was around 5%, the coupon rate. Now it's going to be 10.5%. And since the debt is going to be longer on their balance sheet, they will need to pay this interest for longer. For this year alone, they are going to be 30 million US dollars extra as interest, and next year 40 million US dollars extra. Of course, this has an effect on their total expenses. About 20% of their interest expenses are going to increase, and consequently about 15% less in free cash flow in owners' earnings. So should we be happy that they have converted this debt, that they have done this restructuring, or should we be sad that now they are paying more in interest expenses? Actually, we should be happy because the risk of default now is gone. You should not be expecting this company to go bankrupt next year or in 2024. So if some people are putting politics into this, then they can be happy that maybe we'll have another president in 2025. This executive order will be repealed. So if people are betting on this, then it is okay because there's more time. But we should not be expecting the company to default in 2024. It's not going to happen. Will it default in 2027, 2028? This is a possibility, but with more time, they have more room to do things, more options in front of them. And since the company no longer qualifies as a REIT, they were forced to pay 90% of their profits as dividends. Now they don't have to do this. They can use their profits. The company is profitable. They have a reasonable cash flow. If you ask me, they can use all of that extra cash to repay their debt. So even if today you can say that they have so much, over $1 billion to pay as debt in 2027, in 2027 it will be less because they are going to repay all this debt gradually over the coming years. And the more debt the company pays, the better it will be for the shareholders of the company. Because when the company pays the debt, more people will be interested to buy the company for the long term. I told you when I made this investment, this is not really a company I want to hold forever. It's mostly about taking advantage of this market inefficiency. You look at the company today, accounting for the extra interest expense, the free cash flow for the year is expected to be about 250 million US dollars. The company has a market cap of about 900 million US dollars. So the price to free cash flow ratio is about 3.6, which is pretty low. You calculate the intrinsic value by discounting future free cash flow, you will see it is undervalued. The company is trading under book value, and if GEO Group correctly rebuy their bonds, that is, they repay the bond, they can be qualified in a few quarters, maybe as a devalued stock. Right now, we'll say it is a value stock, but they are on the potential to be qualified as a devalued stock. What is a devalued stock? What is a value stock? I've talked about it. It's not a clear definition, but for me, I don't see it as a devalued stock right now. But it is a possibility. It can be. It is on the borderline, I will say. It is a possibility if they do the right thing that it can be a devalued stock. And you look at the risk-reward asymmetry, even if it is risky, because of all the political pressure, I will say it is risky. You don't know what President Biden will do again. So you don't know. You don't know this year who will win the Senate and the House. You don't know who will win the elections in 2024. So there are all these uncertainties. These are risks. But you look at the potential reward, it is much bigger than these risks. So that's what we are considering as the value investors. You're worried about the lower revenues, lower income because losing their contracts from the Department of Justice. It is something that you should not really be worried about, because looking at the states still needing these private prisons, I believe that revenues and income would be stable. The effects of the DOJ, of course, it is a negative on the stock. In the short term, it is going to be visible, but gradually, because of ICE and the states, I don't think the effects long term will be here. As I told you, the next president can always repeal that executive order. So is GEO Group still a buy today? Yes, it is still a buy. Am I buying GEO Group? For the time being, I'm not buying it because there are other stocks I'm buying, but it is not a stock that I would say that I won't buy again. Maybe I would buy again. It has gained a little recently. It's not so interesting anymore. But if it falls again for some reason or whatever, I will going to buy the stock because I believe it is a good investment, let's say for the next 3-4 years. As a conclusion, what we can say is that why I'm investing in GEO Group is because of the fundamentals. What we can see on the balance sheet, what the management is doing, not because of politics. I already told you about this. Don't invest because you expect that Joe Biden will not be re-elected. You expect that the Republican will take the House or the Senate. Yes, probably this is going to happen. But don't invest because of politics. Invest because of the fundamentals on the balance sheet, on the income statement, on the cash flow statement. So let me know in the comments, what do you think about GEO Group? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.